Hello friends, hope you are doing well. So today we are going to talk about two important small cap stocks which have a very good potential to go from here. So we are going to talk in detail about that two stocks, and we are going to talk in detail why you should buy that stock and what is the future prospects of the stock. So guys, thank you for joining, and I welcome you to my YouTube community. Just click the subscribe button and join our YouTube community. Now let us go and understand about these two very good prospective stocks in detail. So first stock is nothing but a small cap stock is Greenply Industries. So talking about Greenply Industry, as you can see here, the Greenply Industry has fallen a lot from almost 220 level to almost 146 level. And why it has fallen? The reasons are many, and that we are going to talk in length about it. But now it is coming at a good buy level, so that is why we are talking about this stock. So let us go and talk about this stock in detail. So first of all, let me tell about the background of this company. Well, the Greenply is nothing but it has a various business segments, includes wood-based products, that is plywood and allied products and face winner, and it is venturing into MDF also, which is very good product, and through which they have a high margin, and overall the demand of MDF is quite high. Again, this has four domestic manufacturing facility in India, in West Bengal, Nagaland, Uttar Pradesh and Gujarat. And again, the new expansion is coming at a Gujarat level now, which will literally change the game of Greenply from here. So that is what you have to watch out for. It is more than 550 crore basically plant is coming, and that once it's about to commence, and once it is commencement happening now, you will have a very good growth you can see in this counter. Again, they have a overseas manufacturing units in Gabon, West Africa, and Myanmar. So it has various manufacturing units in India and across the world. Again, it has various cities covered. Basically, it has more than 900 cities, town and villages across 28 states and 6 union territories. So it has a widespread area, and you also know that Greenply is quite famous in the plywood. Whenever someone is making furniture and all that, they are using this plywood. So yes, because of their marketing strategy and the way it is very much popular in that India level whenever it comes to furniture and all that. Also, the distribution network of more than 2300 dealers and authorized stockists. Now, this is where the moat comes into picture. When you have a wide distribution, basically network, no, it will always consider as a moat is nothing but no, actually the competitiveness of a stock against the competition. So competitiveness, if it is high, then it is always a good for a company. Also, retail network is exceeding 6,000, more than 50 physical and virtual branches in pan India. Now that shows that 6,000, basically if you see the network, now this is on a very high level. Okay, and also 50 physical and virtual branches across pan India. Again, portfolio includes like no big names like Green Club plus 700, Green Club 500, and Optima Gym and Ecotech. Now these are the famous products of Greenply Industries. Now talking about why it is falling. As I told you, the stock has fallen a lot. One of the main reason was the subdued demand and cost pressure. As you are aware, the inflation was on a higher side, and of course when the inflation is on a higher side, the economy gets little bit slower, and that is where there is a substitute demand and cost pressure coming in last 6 months. As a result, the stock has gone down. Again, another reason was rising import and new capacity addition and creating margin pressure for MDF. Now, as I told you, new capacity are coming, that is in Gujarat, and also now there is a rising imports of the plywood and all that, and that is what is hampering the demand portion of this company. Now hopefully when the commencement of this plant is done in Gujarat, no, it will create a much better result, because overall the once the unit is there, the production will be there to cater the demand. Again, MDF demand moderation or price erosion is a key risk. Now MDF is, as I told you, is one of the most important product of there, and that is what you have to understand. So any type of demand moderation at that level and price erosion will play a key risk factor, and that is what you have to keep in mind. Again, EBITDA margin to remain pressure in near term. Now why EBITDA? Because as I told you that there is a capacity expansion. As there is a capacity expansion, your capital is more required, and you may have taken a debt also, interest part and all that part will create a pressure over the time, and also subdued demand and basically inflation and all that is also having a pressure on the margins. Again, now let us understand what are the various positives of this company. Talking about the positives, as I told you, it's entry in the MDF segment is expected to give company growth visibility for long term. MDF is nothing but medium density fiberwood. Now this is where no it is having a creating a big margins, and no it will give a complete growth and visibility over long term, because MDF is quite in demand in this market. Also, company's net debt is expected to peak by 20 financial year 23 and will be likely to come down to, because of the new capacity addition. No, there is a higher level of capex at a company level, but now as and when the time goes, this capex will go down, and which will be a positive for this company. Also, company's gross margin in quarter 3 financial 23 improved by 34 bps year on year, that is nothing but 39.1%. So as you can see here, slowly and gradually, but the gross margin increasing, and gross margin plays a big role, because it will directly hit their bottom line. So that is an important point you have to keep in mind. Now let us understand about the financials. Now talking about the financial, as you can see here, the revenue is in 2022 was 1560 and expected is 1840, 17.7% growth, and expected for the next year 24 expectation is around 24.2%, then 16.4%. Basically, if you can see here, the profit before tax will be 116, 134 and 190. So it is a quite a high jump over the years, and that will be a big thing to understand. Again guys, basically at the end of the day, adjusted PAT will be 76, 98, 140 over the years. That is financial year 23 estimates and 24 estimates and 25 estimates. Again, if you talk about EPS 23 estimates will be 6.2. Earlier it was 7.7. So you can see there is a fall. But however, now after that, again there is a pickup of almost 25-30%. Then again from 8 to it is almost going almost 30% there up to 11.4%. So as you can see, no, slowly, gradually, no, the adjusted PAT is going up, and that is a positive indication for a company. Also, talking about various ratio. Now this is very important to understand, because if you talk about various ratio, the EBITDA margin in financial 22 was 9.6. In 23 it is around, estimated will be around 8.7. However, it will go up to 10.6 and 11.2. So you can see here the EBITDA margin is slowly and gradually increasing. That is a good point. Again, these are all assumptions which we are taking here. EBIT margin percent will be increased from 6.8 to 7.8 to 8.5. So it will reach to the earlier level which we used to have. Adjusted net profit margin will from 6.1 gone to 4.1. Now it will be in future it may be 4.3 and 5.3. Inventory days is going from 50 to 47 lower. Again, it will remain at 47. Again, debt to equity, as I told you, that financial 23 will be the peak of the capex cycle. So from 1.2 it is going down to 0.9, then 0.6. So that is good. The debt equity ratio over the years, it will be going down. The main thing is here ROE. So earlier, if you see financial 22 ROE was good, 19.44, but it has gone down to 13 in 23 estimates. Then again it has gone up to 14.5. It will go up to 14.5, then 17.7. So slowly and gradually it will try to meet the earlier ROE which it was clocking during financial 22. Even ROC also from 12.1 to 13.9 to 17.5. So next 2 years, when the new capacity expansion comes, it looks like it will be in a better shape. Again, if you talk about EV by EBITDA of 14.8, which is going to come to 9.5 and 7.2, which is good. Again, P ratio, of course, if the EPS increase, it will go down. And the main thing is price to book value. If you can see, a price to book value is literally going down from 3.2 to current year it was 2.7, and it may go down to 2.4 to 2. Now this shows that yes, it is a very good prospects from here in future, and that shows that the Greenply can easily go up from 25 to 30% up from the current price. once the commencement happens and once there is a little bit upside in the market, it will give you a very good opportunity in this stock. So my recommendation, please, you can invest at this stock at the current level. It is a good level to invest. Now let us talk about the technical also. So talking about technical, guys, as you can see here, no, the company is literally going down earlier. Okay, from almost 220 level, no, almost it has gone down to 140. But however, if you can see in much more minutely, little bit of consolidation is happening here. This shows that yes, from here now you can see this green bar rolling agent. So it may go up from here, and that is the positive sign which you have to trigger. But yes, unless there is a green trigger coming here, you have to be careful. But yes, from here it looks like the base will be there. From here it can also go up. So yes, technically also no, somewhat base is happening, but we have to watch whether it will go up from here. But fundamentally also, I feel that the stock is at a good level to buy, and you can just think over it, and you can buy that stock at even current level of around 145, 146. Also maybe upside you can get around 30% at least from here. Now let us talk about another very good quality stock, that is nothing but a Quess Corporation. Now, talking about Quess Corporation, you know that no, Quess Corporation is quite famous. You know that Monster, correct? Monster Consulting, HR Consulting, no, that no, like no rival of Naukri.com. Now, basically, that the company only we are talking about. If you are not aware of, that is Quess Corporation, and that is also a small cap stock. Talking about Quess Corp, no, basically, if you can see the chart you can see here that it is almost fallen by almost 910 level to almost 370 odd level, more than almost you can say 60-70% fallen. And now let us understand whether at this level where you should buy or not, and why the stock has fallen. So we are going to talk in detail about that. Now, talking about the Quest corporation, now let us understand what is this background. Talking about the background, no, it is India's leading integrated business service providers, much more bigger company, no, very big, and also it has a various segment also. Earlier it was used to be known as no IKEA Human Capital Lines, IKYA Human Capital Solution. Again, it incorporated in 2007. It had a headquarter in Bengaluru. Again, company got listed in stock exchange in 2016, and after that, it company had a very good run. Now, again, in basically, it has a strong presence in India, North America, Middle East, Southeast Asia. So it has a very good geographical coverage. Correct. Again, it is a comprehensive solution including recruitment, temporary staffing, technology staffing, also IT products and solutions, skill development, payroll, compliance management. Guys, this company is so big that it is, I think, coming second after TCS. It has more than 500,000 employees. 5 lakh से ज़्यादा लोग हैं. So it's a big company, but overall their margin is lowered. So that is why you can see that it's a 5,000 crore capital market capitalization. But as we are going to talk in detail about that. Also, know it. What are the key highlights? The key highlights, it says staffing, that is 97% of total revenue. Okay, now this is what the thing is. Staffing, yani recruitment and all that. No, that consider almost 97% of total value, and that is their basically key source, and that is their expertise. Again, tech total headcount, I told you, no, it is more than 500,000, an increase of 25% year on year. So it is quite an increase year on year. If you can see here the headcount and everything. Again, platform posted its highest revenue of rupees 561 crores, a growth of almost 20% year on year. So it's a very good growth you can see here. Also, security service revenue is up by 13% year and 5% quarter on quarter. Headcount crosses 22,000 in security services also. Again, another key development of Monster is that Monster, which used to be very famous and regarding our competitor of Naukri, has been actually rebranded as Founded. Why? Because they want to change the way they are operating the Monster. They want to give much more better service through Monster, and that's why they are giving a new name of Founded. Monster sale cross almost rupees 40 crore milestone. Again, candidate traffic engagement continues to be strong with 6-month active candidate base almost touching 1.8 crore for the first time. So it shows that at this Monster is also having a very good development. Again, talking about the growth outlook from here. The growth outlook looks good. If you can see here, it is aiming 20% EBITDA CAGR through enhanced sales capability, cutting edge technology, and improved cross sell capabilities. So 20% EBITDA growth, it's a very good thing to understand, because no, it shows that yes, the company is able to control the cost and everything, looking for portfolio adjustment to turn around or exit underperforming businesses. So they want to exit from the stock, basically any type of no portfolio adjustment, and also they want to exit from the businesses which are not performing. And that is important, because see, if the business is not performing any of your segment, no, then it will literally bring your profitability down. So they want to get out from that. Also aims for 20% ROE and 20% year-on-year operating cash flow growth. So 20% ROE growth. Now that is a very good ROE growth. And see, ROE should be at a good level, no, because if ROE is actually decreasing, it is not in a going at a no increasing trend, then it is a problem for a company. Now let us talk about now about the profit and loss account of Quess Group. Now talking about profit and loss account, as you can see here, the revenue in 2022 growth was 26%, for 23 with 26.9, then 19 and 13. Okay. Now talking about now basically EBITDA in 23 was at a negative level, year on year change, because it has actually reduced from the earlier level, but now it is going to change. Talking about no directly profit and after tax, from 253 to 269. So basically why it is happening, the reason is simple, that no, the EBITDA has fallen down for the current year, but after that you can see this is a very good jump from 239 to 377 to 465. Now that is a very good jump. Talking about EPS, as you can see, earlier it was, last year it was 16.3, this year it may be around 16.6, which may go up to 24.5.1%, and from there it going to 31%. So that shows that yes, there will be a very good growth from here, and it shows that now companies working on the financials and companies trying to control the cost, and that's why it is showing a good growth, almost 20-25% growth from each and every year. Now let us understand about the various ratios. Now talking about various ratios, if you can see here, the EBITDA margin, which is one of the main metrics which you have to see for Quess, earlier it was 4.6, then it is gone to 3.4. Now it may inch it to 4.1 and 4.3. Now why, you may tell Tapan, this EBITDA margin is very low. Why it is so low? The reason is simple, that they have 5 lakh employees, and you can see that their employee cost is the highest, and that is the reason of their EBITDA level is quite low. But yes, they are working and they are trying to bring it to 4.9, 4.10, and their target is at least it should go to 4.5. That is what management is saying. Correct. Also, other things where the receivables and all these are constant. Another main factor is debt to equity ratio, which is 0.2, 0.3. Now, this is not a higher side. Anyways, IT companies has a very less debt to equity ratio. That is always in their favor. Talking about ROE, now this is one thing you have to understand. Slowly and gradually, they are trying to increase this for the next 2 years. And that is what the management commentary is, that they want to increase ROE for the next 2 years. So you can say 20%, 30% minimum increase. So 20%, if you see 10 to 14.3, actually they are trying to jump much more, and 14 to 6.2. Again, all these are assumption, but this is based on the guidance which the management is given. So ROCE also 10.9 to 14.7 to 16.3. Again, guys, EV by EBITDA, we can see here, no, 9.1 is going down to 6.5, 5.4. That is a good thing. P ratio also, no, because no growth is coming, it will substantially go down, and book value also is at a lower level. So this shows that just fundamentally also these stocks remains good, and currently yes, there is a fall, but there is a good perspective that it may go well in near future. At least 25% jump is expected from here. Now let us just see the technicals also here. So let us talk about technicals. So as you can see here in the technicals, now technicals also you can see here that yes, there was a fall, a good fall from almost no 900 level to almost 360, but somewhere the small base is created with a high volume. The stock was up because there was a stake by the promoter and other company, and that is why. But here the small base is coming in. From here the chances are there that it may go up, and of course we have to see whether the consolidation is happening at this level also not. But yes, technically still it is looking at a no downward trend, but I think the base will be created from here and again it will go up from here. So guys, that is what is my take. Fundamentally and technically also no, Quest looks good overall, and you can enter at this level because no, you should buy a stock when there is a problem in the market, correct? Because at that time only you will get the stocks as much more cheaper level, and you can basically make use of it and have a good return over a time. So both Quest Corporation and also the Greenply basically are the good stocks you can think about investing at current level, because currently the stock market is down and you can make use of it. So guys, hope you like this video, and just type in the comment box whether you own Quest Group or Greenply or not, and what you are thinking, or are you going to buy it or not. And guys, if you want to understand and know about any other stock investment and analysis of any other stock, please do write in the comment box. Yes, I will take it in future. And guys, do subscribe and like this video, and I'll see you soon next time. Thank you.